company that we're tracking this morning is EaseMyTrip. The latest news flow has been on the resignation of the CEO, Nishant Pitti. The stock has been falling in a free fall, to say the least, 26% in the last 6 months. The promoters have been selling stake and exiting the travel services provider, and that is what's probably concerning the market. Hiral is joining us with a deep dive on EaseMyTrip.
Thank you. Absolutely. If you see in terms of the stock price, a 26% kind of a downtick is what we've already seen in the last 6 months as well. So good amount of wealth erosion that's happened for the investors. Now, what's happening from a promoter's, FIs and DIIs perspective? All the three of them have been reducing stakes. So it's not really the FIs and the DIIs who are losing confidence, it's the promoters as well. That's what it comes across, because if you see the FIs, their stake has gone down from 4.15 in FY21 to a 2.98. DIIs from 11% to a 2.49. And if you talk about promoters, from a 74.9%, it's now come down to 48.97. So selling across the board, that's what we've been seeing. Moving from there on, let's look at the promoter action. Now, Nishant Pitti has reduced his stake from 37.13% since listing to a 25.88 in December 2024. Apart from that, Nishant Pitti has sold 1.4% stake in December 2024. That's the recent one. And the reports were that he was planning to sell little over 14%. Now, whether there have been no buyers for the remainder or what's the concern, we don't know. But that's the amount that he's gone and sold. Nishant Pitti, though, has increased his stake marginally to 0.5%, to 10.29% in December 2024. So a marginal increase by Prashant, but the other two co-founders have gone ahead and reduced as well. Moving from there on, let's just look at Nishant Pitti's stake since the IPO. From 37.26, it's now gone down to 12.8. It was 14.21. That's when the reports were coming in as to that he's going to sell entirely, but now he's sold around 1.4 and stands at 12.8% with regards to Nishant Pitti. Moving from there on the back of the stake sale, he did come out with a clarification, probably, or a tweet, or he put out a line on X, clearly saying that he's recently sold a small portion, and it does not mean that he does not have any confidence in the company's future. In fact, he said that the team is talented, there is a strong growth path, and he does not have any intention of selling further stake. Now, whether this is damage control or not is what we need to hear out from the management and get a clarification from them on that front. But moving from there on, if you see in terms of who's buying, it's the retail investors who are getting stuck here, because from FY21, the retail participation was around 9.92%. It's gone up to 44.14%. So retail investors should hold or sell out is the key question over here, because FIs, DIIs, promoters, all three selling, retailers are getting stuck. Moving from there on, you've seen the leadership change that has happened now. Nishant Pitti has resigned. Nishant Pitti has taken over. Nishant was the CEO and he was a co-founder. He was the CFO and a co-founder. He's got elevated as a CEO from CFO position. Moving from there on, now when the promoters are selling out, what's happening? It's having a negative impact with regards to investors go. Secondly, reduced confidence in the company's prospects. That's what it is signaling from here on. Long-term stability is becoming an issue, and there could be a change in terms of where business strategy goes, taking into consideration that a new CEO has taken over. And from here on, what is deteriorating? Let's understand the fundamentals. Firstly, if you see in terms of the revenue, that has been the lowest in the last 5 quarters at 145 odd crores. So a downtick coming in terms of the top line as well. If you talk about the marketing and the employee cost, that is on an increase for the company. If you see in terms of the employee cost, highest since listing at 17.32% of the revenues. And if you see in terms of the marketing cost as well, that's also highest since the listing at a 0.48% of the revenues. Apart from that, if you talk at the operating level, the OPM margins, that's the lowest in last 13 quarters at 26%. So margins are also taking a beating. And if you talk about the debtor days, that stands at 144 days, which is the highest in the last 4 years. Very lastly, if you see in terms of unrelated businesses, that is what they've been looking at. Will that be a threat? That is what we need to understand from here on, because they've entered into electric vehicles. Second is they're looking at medical tourism. So these two are absolutely unrelated businesses for them. Medical tourism what's the scope is going to be something that we need to understand. And very lastly, key questions that the promoters need to talk about is whether the promoters are en route and exit. What is the strategy from that front? Secondly, DIIs and FIs do not have the confidence, and that's the reason why they've gone ahead and reduced their stake. Thirdly, the board has actually given an approval for a fundraise of 1,000 odd crores. Will markets support it, and what is, what are they going to use these funds for? Because they have entered unrelated businesses. And why is the company looking at unrelated businesses? These are key questions that the company needs to respond to retail investors for them to make an informed decision. But clearly, wealth erosion is what is on the cards right now.